Hey, what's going on guys? Welcome to this video. In this video, I want to go over the easiest ICT trading model that you can use every single day on any single market. Me personally, I use it on futures and I use it on NQ and ES. You can use it on any market and any instrument that you want. So the model is called the inverse fair value gap, and you've probably seen a lot of videos that I've uploaded about this, backtesting and going over, but this is the easiest model that has helped me pass a lot of accounts, a lot of evals, and get paid from funded accounts. All right, so let's go and go over the things that you need to understand before going into the model. So you only need to understand just 4 things, okay? And for this model, you don't really even need a daily bias, and you need to understand just these 4 things, okay? So this is an important concept that you need to understand. So the first concept is major liquidities. So you need to understand what are the major liquidities. So I have listed a couple of major liquidities here. So first one is overnight highs and lows. So that would include, if you're trading New York session, that would include London session highs and lows and Asian session highs and lows. Previous session highs and lows. So if you're trading the AM session, again, that would include the London session highs and lows. But if you're trading the PM session for New York session, that would include the AM session highs and lows, right? Previous days highs and lows, previous week highs and lows, hourly and 4-hour highs and lows. And you can also look at previous week highs and lows. So those are the main liquidities that personally I look at. But you can also backtest and test out, what other liquidities that might work out for you. Now, the next thing that you need to understand is when these liquidity will be swept, and when the liquidity sweeps, you want to make sure that there is a good reaction after that, right? So you want to understand liquidity sweeps very well. So if you do not know anything about liquidities, or if you are kind of new to this ICT trading strategy, make sure that you go back to ICT's core concept and learn about liquidities, because liquidities are very, very important, right? Fair value gap. Now, the next concept, this is the most common concept that ICT traders know, is the fair value gap, and it's just the imbalance. So if you do not know what fair value gap is, again, go back to the core concept and learn about fair value gaps and how to use fair value gaps. And the last concept that you need to know is SMT. Now, this concept is not required every single day or every single time you take a trade, but with an SMT, it helps you build more confluence on your trade, and it will give you a indication as far as when a reversal might happen or when that you could enter the trade. So let's go into the chart and show you guys exactly what this concept or this strategy looks like. So the first thing that you want to know is where are the major liquidities. So for this example, let's just say that we are in this range, right? So let's just say this is London session, New York session 9:30 a.m. here, right? So I'm gonna go ahead and mark that out here. Now it's 9:30 a.m. and then price, let's just say the previous session left London highs and lows, and I'm looking for one of these to sweep, and then one of these sweeps, I want to look for a reaction and see this inversion fair value gap. So in this example, price goes down here, sweeps the London session low, and then when it sweeps London session low, we have this bearish fair value gap that forms, and I want to see this bearish fair value gap get inversed with a good reaction. And once this gets inversed, you can either take the trade right at that inversion, right after this candle inverses, or you can wait for this retest of this inversion gap and take this entry, right? So if you wait for the retest, sometimes it doesn't retest, it just keeps going. But if you want to wait, it's up to you. You might miss some trades here and there, but go and back test and see what kind of data that you can collect on these and which one works for you. So for me, I personally don't really wait for retest unless if the candle is like all the way, like very far away, then I would probably wait for a retest so that I can get a better risk to reward, right? So, and then you would target the next liquidity, which in this example is London high, and then you would probably trim at the next swing high or the next fair value gap. And then personally, I like to go 1 to 2 hour before I go break even. So let's say I entered right here with a 21 point stop loss, and then I would probably go break even at these highs and then take my trim at 2R. So you want to take a trim and then go break even at the next liquidity or at the next fair value gap to make sure that you don't go red from a green trade. So in this example, if I go break even here, right, and then the trade fails and then it comes back down into these this fair value gap, I would get stopped out or break even and I wouldn't lose a trade. So that's that. Let me show you guys example here. So this is the NQ here, and we have this London session high, and currently it's at pre-market. So I usually don't really trade pre-market, but I'm just showing you this for an example because it has a really good inversion here. So so we have this, right? We have this London session highs, lows, London session highs and lows. So if I were to replay this here, so now as you can see, we sweep the London session high, right? We sweep the London session high on NQ, but ES does not sweep it. So then what do we have here? We have SMT, right? So that's a Kraken correlation. So where this sweeps on ES, and then this one, sorry, NQ, and this one doesn't sweep on ES. This means there's a confluence, right? So there's a reversal that might be coming. So now we have this inversion fair value gap right here, with right there. I want to see a good reaction and close below this. You can also keep switching time frames to see which one has a clear inversion fair value gap. For this example, I like this 1 minute. You can use 30 second, 1 minute, 2 minute, 3 minute, whichever time frame you feel confident with. And then I would use this stop loss above this, close above this fair value gap, right? And then entry would be a close below it. So in this example, you can see we got this inversion in a little bit here, boom. As you can see, price closed below it, and now my entry would be this candle right after we close, and then stop loss would be a close above this fair value gap. So we have this liquidity sweep, we have SMT, and then now we have inversion fair value gap. So I would probably trim some here, go to break even at these lows, and then hold some runners until the next liquidity, which is this here, and then the clear liquidity is this, and then this 50% of the dealing range, and then London session low. So let me go and see where this price takes me. So boom, 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 I got my trim there. I went to break even now. Even if the trade fails, even if the trade goes above, I would get stopped out break even and I would not be in a loss, right? So boom, maybe I'll trim another one here, and then let's see if I can get one more trim before it stops me out. All right, nothing yet. All right, I got another trim right here at this low, and then I'll probably hold a runner until the 50% of the dealing range, or even this next liquidity level, which is London session low. But usually when we hit the 50% of dealing range, as you can see here on ES, price tends to reverse. So you can also use this 50% of the dealing range as a liquidity level for a reversal. So 50% is pretty much the range from the opening, which is going to be 6 p.m. Low. So it should be this low right here. So if I were to mark this here, dealing range, let me go and mark this. Dealing range, boom. Oops. Okay, there we go. So there's the 50% range right here. And then ES took that, so we got an SMT, and then price reversed up. And then I got stopped out break even. So that is pretty much it. It's a very simple model, and you don't even need a daily bias for this. And you don't even really need like higher time frame bias. You can just come to market every single day, look for that the major liquidities, and then look for the inversion during whatever session that you want to trade. So that's all, guys. And then before I leave, I want to show you guys my Discord here. So it is free. I post every single day my weekly outlook, weekly analysis, my daily analysis, what I'm looking at every single day. But like I said, you don't even need that daily analysis. You don't need that bias, but this helps a lot as well. And then intraday commentary, so pretty much what I'm doing, what I'm seeing like throughout the day, and what I'm looking at. So what kind of trades that I'm taking and such. And then I also do daily recaps of what kind of trades that I took, what I missed, and what I was seeing every single day. And then I have some other educational videos here as well. So yeah, guys, anyways, hopefully this video was helpful, and if you found this helpful, go ahead and leave a like, subscribe to my channel, and comment down below. And then if you guys have any questions, I'll try to answer it as soon as I can. Otherwise, you can join my Discord, ask me a question on this, this general channel, and then I'll try to answer any questions. All right. So thank you guys for watching, and I'll see you guys next time.